another reason why some people aren't profitable when it comes to trading is because they want to get into news as soon as the news gets out. And what I'm going to tell you right off the bat is that you should be waiting at least 15 to 30 minutes. And in today's video, I'm basically going to go over my news strategy, how I trade news, and how I am profitable with it. So without further ado, let's get it. Let's go. So I'm going to take you guys through CPI, which happened today. Today is, for reference, February 12th, 2025. So let's see what gold did today. For starters, first of all, you might be wondering, where do I find news, Venice? Like, where is it? So if you type in ForexFactory.com, it'll show you basically the news for every currency pair, US, mainly for gold and stuff, JVP, XYZ. So as you can see, for today, we had news. We had European news, K. We had news for the US dollar. We had news for JBP as well. And we also had news for the Canadian dollar as well. So the folders that you really want to pay attention to and that are key to pay attention to are going to be the red folders, because the red folders cause a lot of volatility. So as you can see right here, we had news today at 8:30 a.m. and it was core CPI. And you can basically see what the forecast, the actual, you can see the previous, and you can see the forecast. And I believe you can see what they estimate the forecast to be. And that could give you basically a sense of direction to choose towards when you are trading. But without further ado, let's get it. Let's go. So for example, this is what happened this morning on gold. Okay, so I'm basically going to mark up where we were this morning for you guys. So this candle right here was CPI. So as you can see, we pushed down heavily. I usually say that news is the excuse, and I definitely feel like that 1,000%. Usually, I like to tell people wait about 15 to 30 minutes before trying to get into a position. So as you can see, we are currently on the 15-minute time frame. I'm going to get rid of this box right here. I'll add it back later. So as you can see, we're currently on the 15-minute time frame, and you can see that news usually likes to leave a really, really big wick behind, basically enticing sellers and letting people know that tricking people into thinking that the market wants to continue going down. And as you can see, the market actually didn't continue going down. We came here, we engulfed this entire area, and the market continued to push back up. So instead of getting in at 8:45 a.m., you could have patiently waited until right here, right? I'm going to bring this up here so you see it a lot better with your eyes, right? You can see this zone right here. My entry would have been right here. And then my stop loss, just in case I want to be safer, would be a bit below the wick. Because originally gold was already in bullish momentum as well. I think understanding market sentiment and where the market is going is very important also. But let's just say you rode the trade up until here, you were holding it. You could have got a really solid move from here at 8:45, and then it would have been a 1 to 3 risk to reward on this particular trade. Your stop loss is below the wick. Or if you wanted to, you could also go behind here and look for structural points, right? And maybe you right here would have been your stop loss instead, because that was the lowest point, right? So if it stops me out there, then I'm wrong. And basically, I just use my stop loss as a max risk. So if I'm wrong, it'll stop me out of the trade here. And that's okay. So there's that. And then this would have been your potential trade for a 1 to 3.97 R. And as you can see, you would have been out of this trade by 12 o'clock. I think that's not too bad, but say you don't want to hold the trade, you could have just scalped the trade as well and got in and out within the 15 minutes of this particular move in the market. So for the first 15 to 30 minutes, you're going to want to sit on your hands. In this case, it would have been 15 minutes, right? And you would have entered here. But say you missed that entry, you could have entered here and put your stop loss a bit below just in case. the first move is usually a fake out move before the actual move slash the direction that the market was going to go in anyways. I usually like to call news the excuse. We're going to go over the exact same trade, but we're going to do it on SPX because this is also one of my favorite trading pairs. So as you can see, I already have this marked up for you guys, but I'm basically just going to go through it with you. We can go over to the 5-minute, make it a little bit easier. Okay, so as you can see, we were in an uptrend, right? The market was moving up. As you can see prior, we have a higher low, higher high, higher low, higher high, and then the market pushed up. We kind of stalled out in this area and still stalled out in this area as well. As you can see right here, the reason why I say news is the excuse is because of what happened right here at exactly 8:30. And then everything kind of just went back to normal as we found a support zone down here. And if you guys don't know what support and resistance is, definitely go back to my video that I have uploaded. I will do my best to link it here for you guys, so you guys could definitely check that out after this video if you'd like. But basically, you're going to want to look for key points where the market could retrace, right? So down here was a very strong support zone. So, and we also had New York Open happen at 9:30. So honestly, to be honest, I would have waited until the market came down here at like 9:10, and then you could enter here if you wanted to. But the market usually likes to react at 9:30, as you can see, right? So I would have waited until right about here when we came into my second zone at 9:35, and then I would have entered this position here. And then for me personally, I just like trading zone to zone. So as you can see right here, say you entered the market right here, you would have risked, I risk 5 points to gain 15 points. And then you would have been in and out, once again, zone to zone with this trade. So you wouldn't have caught the first crazy move, but the goal is just to get out with something, right? Say you missed this trade, you could have caught it right here again at 10:15. And this would have been your retest. I also talk about that in another video as well. So definitely be sure to check that out if you are confused. Those are basically my two examples. And the last thing that I'll say is just to make sure that you have your pre-market analysis, right? Have your pre-market analysis as opposed to where you want the market to go. And say the market doesn't go there with news. Like say, for example, this didn't happen and instead the market shot up heavily and created a new all-time high, or whatever the case may be, right? Say it shot up. What you could be looking for then is maybe key resistance areas here where you could take the market down first. So seeing the fact that we are very, very high, or key points where the market could come back down to retrace, and then you could get in for a buy. So that's pretty much it for this video. I hope you guys learned something. If you did, definitely leave me a thumbs up and subscribe, and let me know what your biggest takeaway from this news training video was. And I appreciate you all, and I'll see you guys in the next one.